Good afternoon. This is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking energies, new highs on the crude oil contract. Just missed hitting that $70 level. 69.97 is a new year-to-date high, up 2% and change, up toward the highs. We ended up about 1.63% on the day at about 69.60. 69.64 and change. So that crude oil move was pretty dramatic. Now, the extension of the bullish fundamentals that we've seen, especially going into a weekend, probably is more geopolitical, but there was an extra catalyst that may or may not be real. The UK denied it. So the UK denial happened very shortly after the story, but according to Market Watch, Financial Times was publishing a story that said the UK would ban all hybrid vehicles by 2040, and crude oil spiked on that. It was already up around 1% when this happened, got a little bit of a boost from that. And then again, you probably saw some of the geopolitical fears creeping in. That was probably short covering when it pumped up from there. We've had a little bit of a sideways movement, and this is the breakout of a sideways channel now. So when you see a move like that, it's probably the players who thought we would break to the downside of the channel getting a little bit spooked, but it's sustained again because of the geopolitical risks. Iran, we're coming up to that May 12th deadline for the Iranian nuclear deal to either be re-ratified or reconfirmed by President Donald Trump by saying they've complied. He seems to be leaning away from that. That could potentially take some crude oil dealings with Iranian banks off the market and take some barrels of supply actually off the market. Not happening yet. We're still, a good 7 or 8 days away from that deadline. So it seems to be taking hold of the market with all else equal. Now, speaking of all else equal, this isn't really equal. Rig counts from Baker Hughes came out 5 weeks in a row higher now. That's pretty big. I mean, we got 9 oil rigs added this week. To the total count. We're now as high as we've been since 2015 when we were still on our way down from the $100 crude oil price. The interesting thing about this week to me from a crude oil perspective, as I'm talking to you on Friday, was we had a build in API inventories, we had a build in EIA inventories, we had a build in gasoline inventories, we had a slight uptick in refinery utilization, we had an addition in rig counts from Baker Hughes, and yet we are up above 69. So the overall bullish tone, whether it be geopolitical, seasonal, or just the excess demand that might have also shown its way in the non-farm payrolls number today, we continue to get stronger crude prices. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.